Well, welcome everybody. Thank you for coming to MIT Enterprise Forum's Happy Hour. Tonight we're going to be talking about blockchain. I'm Chris Steinhardt. I'm the chapter chair for MIT Enterprise Forum San Diego. And I'm also a partner at Kenobi Martins, Olson & Bear. I want to thank BDO for this wonderful meeting space. It's really been a real boon to these happy hours, as you can tell by the great turnout we've got tonight. So I thank you for coming, and without further ado, I'll turn it to Sam Nawitz, the BDO, and he'll take it from there. Thank you.
Thanks, Chris. I'd just like to thank everyone for coming tonight. BDO is happy to host, and I'm really excited to see the great turnout. I know blockchain's a really hot-button issue. We're all curious to learn more. Just a little bit about myself. I'm a manager here in our assurance practice. BDO, for those of you that don't know, is a full-service CPA firm. We're the 5th largest firm internationally. We do accounting, reporting, tax, a little bit of everything. So we're definitely out here trying to get you guys to come out, learn a little bit about BDO, a little bit about blockchain. We're happy to help you understand maybe what the new tax legislation will do with some of your different businesses. We got one of our tax partners, Chris George, back there in the corner. Ask him all of your tax questions. I do the financial side, so I'll do my best, but most likely point you to him. Happy to answer anyone's questions a little bit later on. We've got full bar, beer, wine, good stuff, lots of food out there, so help yourselves. Hopefully everybody enjoys.
Hi, my name is Mary Beth McCabe, and I am at National University. We are a private nonprofit university. I just wanted to welcome you again and look forward to helping you to understand more about this whole blockchain for business idea. And I wanted to also recognize some of the people in the audience who are volunteering their time for the MIT Enterprise Forum of San Diego. So if you are you're in a volunteer capacity, would you please stand or raise your hand? Those of you who are, please. So you can look around the room and you can see these are people that I want to connect with. These are people who I might want to be close to as far as learning more about technology and business in the future. I thank you all for your service. I've been involved as a volunteer for several decades and always come back with some new ideas. So if you're interested, then we'd be interested in knowing more about you. So the video that we're going to watch today, I found as a TEDx video. It was filmed in May of 2016. It's had over 2.2 million views. And it features Don Tapscott. Now, he's a digital strategist. He takes the long view on digital. And so I wanted to also show you a copy of the book that I got he wrote called The Blockchain Revolution. I noticed I'm on page 47. So I haven't really gotten into it in that much depth. But I have been taking this MOOC, Massive Open Online Classroom. It's called the Hyperledger. So if any of you are interested, you can go to edX and you can register for that course free of charge. So I'm finding that it's very challenging, but also very interesting. So I'd love to hear how you do with that as well. So after the video, we will have some Q&A. And I will kick off with a couple of questions to a couple of our experts here. Some of you are high expert level, some of you are low expert level and want to know. And so we want to make sure that that discussion flows. So you're welcome to come and stay as long as you can. Our guests here, BDO, we're very grateful for the opportunity and also want to make sure that everyone has a good time. So it'll be a short video and then some Q&A and then maybe a few other minutes. You might meet some other people who you haven't met before in this field. And so I would like to kick us off now. So let me...
The technology likely to have the greatest impact on the next few decades has arrived. And it's not social media, it's not big data, it's not robotics, it's not even AI. And you'll be surprised to learn that it's the underlying technology of digital currencies like Bitcoin. It's called the blockchain. Blockchain. Now, it's not the most sonorous word in the world, but I believe that this is now the next generation of the internet. and that it holds vast promise for every business, every society, and for all of you individually. You know, for the past few decades, we've had the Internet of Information. And when I send you an email or a PowerPoint file or something, I'm actually not sending you the original, I'm sending you a copy. And that's great. This is democratized information. But when it comes to assets, things like money, financial assets like stocks and bonds, loyalty points, intellectual property, music, art, a vote, carbon credit, and other assets, sending you a copy is a really bad idea. If I send you $100, it's really important that I don't still have the money and that I can't send it to you. So this has been called the double spend problem by cryptographers for a long time. So today, we rely entirely on big intermediaries, middlemen like banks, government, big social media companies, credit card companies, and so on, to establish trust in our economy. And these intermediaries perform all the business and transaction logic of every kind of commerce, from authentication, identification of people, through to clearing, settling, and record keeping. And overall, they do a pretty good job, but there are growing problems. To begin, they're centralized. That means that they can be hacked, and increasingly are. And JP Morgan, the US federal government, LinkedIn, Home Depot, and others found that out the hard way. They exclude billions of people from the global economy. For example, people who don't have enough money to have a bank account. They slow things down. It can take a second for an email to go around the world, but it can take days or weeks for money to move through the banking system across the city. And they take a big piece of the action. 10 to 20% just to send money to another country. They capture our data, and that means that we can't monetize it or use it to better manage our lives. And our privacy is being undermined. And the biggest problem is that overall, they've appropriated the largesse of the digital age asymmetrically. And we have wealth creation, but we have growing social inequality. So what if there were not only an internet of information, what if there were an internet of value? Some kind of vast, global, distributed ledger running on millions of computers and available to everybody, and where every kind of asset, from money to music, could be stored, moved, transacted, exchanged, and managed, all without powerful intermediaries. What if there were a native medium for value? Well, in 2008, the financial industry crashed, and perhaps propitiously, an unknown or anonymous person or persons named Satoshi Nakamoto created a paper where he developed a protocol for a digital cash that used an underlying cryptocurrency called Bitcoin. And this cryptocurrency enabled people to establish trust and do transactions without a third party. And the seemingly simple act set off a spark that's ignited the world, that has everyone excited or terrified or otherwise interested in many places. Now, don't be confused about Bitcoin, okay? Bitcoin is an asset. It goes up and down, and that should be of interest to you if you're a speculator. More broadly, it's a cryptocurrency. It's not a fiat currency controlled by a nation state, and that's of greater interest. But the real pony here is the underlying technology. It's called blockchain. So, for the first time now in human history, people everywhere can trust each other and transact peer-to-peer. And trust is established not by some big institution, but by collaboration, by cryptography, and by some clever code. And because trust is native to the technology, I call this the trust protocol. Now, you're probably wondering, well, how does this thing work? Fair enough. Assets, digital assets like money to music and everything in between, are not stored in a central place, but they're distributed across a global ledger using the highest level of cryptography. And when a transaction is conducted, it's posted globally across millions and millions of computers. And out there around the world is a group of people called miners. These are not young people, they're Bitcoin miners. And they have massive computing power at their fingertips, 10 to 100 times bigger than all of Google worldwide. And these miners do a lot of work. And every 10 minutes, kind of like the heartbeat of a network, a block gets created that has all the transactions from the previous 10 minutes. And then the miners get to work trying to solve some tough problems. And they compete. And the first miner to find out the truth and to validate the block is rewarded in digital currency. In the case of the Bitcoin blockchain, with Bitcoin. And then, this is the key part, that block is linked to the previous block and the previous block to create a chain of blocks. And everyone is timestamped, kind of like with a digital wax seal. So if I wanted to go and hack a block and say, pay you and you with the same money, I'd have to hack that block, plus all the preceding blocks, the entire history of commerce on that blockchain, not just on one computer, but across millions of computers simultaneously, all using the highest levels of encryption in the light of the most powerful computing resource in the world that's watching me. Tough to do. And this is infinitely more secure than the computer systems that we have today. Blockchain, that's how it works. So the Bitcoin blockchain is just one. There are many. The Ethereum blockchain was developed by a Canadian named Vitalik Buterin. He's 19 years old. And this blockchain has some extraordinary capabilities. One of them is that you can build smart contracts. It's kind of what it sounds like. It's a contract that self-executes. And the contract handles the enforcement and the management, performance, and payment. The contract kind of has a bank account, too, in a sense, of agreements between people. And today, on the Ethereum blockchain, there are projects underway to do everything from create a new replacement for the stock market to create a new model of democracy where politicians are accountable to citizens. So to understand what a radical change this is going to bring, let's look at one industry, financial services. You recognize this? Rube Goldberg machine. It's a ridiculously complicated machine that does something really simple, like crack an egg or shut a door. Well, kind of reminds me of the financial services industry, honestly. I mean, you tap your card in the corner store and a bit stream goes through a dozen companies, and each with their own computer systems, some of them being 1970s mainframes, older than many of the people in this room. And 3 days later, a settlement occurs. Well, with a blockchain financial industry, there would be no settlement because the payment and the settlement is the same activity. It's just a change in the ledger. So Wall Street and all around the world, the financial industry is in a big upheaval about this, wondering, can we be replaced, or how do we embrace this technology for success? Now, why should you care? Well, let me describe some applications. Prosperity. The first era of the Internet of information, brought us wealth, but not shared prosperity, because social inequality is growing. And this is at the heart of all of the anger and extremism and protectionism and xenophobia and worse that we're seeing growing in the world today. Brexit being the most recent case. So, could we develop some new approaches to this problem of inequality? Because the only approach today is to redistribute wealth, tax people and spread it around more. Could we pre-distribute wealth? Could we change the way that wealth gets created in the first place by democratizing wealth creation, engaging more people in the economy, and in ensuring that they got fair compensation? Let me describe 5 ways that this can be done. Number 1, did you know that 70% of the people in the world who have land have a tenuous title to it? So you got a little farm in Honduras, some dictator comes to power, he says, I know you got a piece of paper that says you own your farm, but the government computer says my friend owned your farm. This happened on a mass scale in Honduras, and this problem exists everywhere. Hernando de Soto, the great Latin American economist, says this is the #1 issue in the world in terms of economic mobility, more important than having a bank account. Because if you don't have a valid title to your land, you can't borrow against it, and you can't plan for the future. So today, companies are working with governments to put land titles on a blockchain. And once it's there, this is immutable. You can't hack it. This creates the conditions for prosperity for potentially billions of people. Secondly, a lot of writers talk about Uber and Airbnb and TaskRabbit and Lyft and so on as part of the sharing economy. This is a very powerful idea that peers can come together and create and share wealth. My view is that these companies are not really sharing. In fact, they're successful precisely because they don't share. They aggregate services together and they sell them. What if, rather than Airbnb being a $25 billion corporation, there was a distributed application on a blockchain? We'll call it Airbnb. And it was essentially owned by all of the people who have a room to rent. And when someone wants to rent a room, they go onto the blockchain database and all the criteria sift through, help them find the right room, and then the blockchain helps with the contracting. It identifies the party. It handles the payments, just through digital payments are built into the system, and it even handles reputation, because if she rates a room as a 5-star room, that room is there, and it's rated, and it's immutable. So the big sharing economy disruptors in Silicon Valley could be disrupted, and this would be good for prosperity. Number 3, the biggest flow of funds from the developed world to the developing world is not corporate investment, and it's not even foreign aid. It's remittances. This is the global diaspora, people who've left their ancestral lands, and they're sending money back to their families at home. This is $600 billion a year, and it's growing, and these people are getting ripped off. Annalie Domingo is a housekeeper, and she lives in Toronto, and every month she goes to the Western Union office with some cash to send her remittances to her mom in Manila. It costs her around 10%. The money takes 4 to 7 days to get there. Her mom never knows when it's going to arrive. It takes 5 hours out of her week to do this. 6 months ago, Annalie Domingo used a blockchain application called Abra. And from her mobile device, she said $300 went directly to her mom's mobile device without going through an intermediary. And then her mom looked at her mobile device, and it's kind of like an Uber interface. There's Abra tellers moving around. She clicks on a teller that's a 5-star teller. He's 7 minutes away. The guy shows up at the door, gives her Filipino pesos. She puts them in her wallet. The whole thing took minutes, and it cost her 2%. This is a big opportunity for prosperity. Number 4, the most powerful asset of the digital age is data. And data is really a new asset class, maybe bigger than previous asset classes like land under the agrarian economy or an industrial plant, or even money. And all of you, we create this data. We create this asset. And we leave this trail of digital crumbs behind us as we go throughout life. And these crumbs are collected into a mirror image of you, the virtual you. And the virtual you may know more about you than you do, because you can't remember what you bought a year ago or said a year ago or your exact location a year ago. And the virtual you is not owned by you. That's the big problem. So today there are companies working to create an identity in a black box. The virtual you owned by you. And this black box moves around with you as you travel throughout the world, and it's very, very stingy. It only gives away the shred of information that's required to do something. A lot of transactions, the seller doesn't even need to know who you are. They just need to know that they got paid. And then this avatar is sweeping up all this data and enabling you to monetize it. And this is a wonderful thing, because it can also help us protect our privacy. And privacy is the foundation of a free society. Let's get this asset that we create back under our control, where we can own our own identity and manage it responsibly. Finally, number 5, there are a whole number of creators of content who don't receive fair compensation because the system for intellectual property is broken. It was broken by the first era of the internet. Take music. Musicians are left with crumbs at the end of the whole food chain. You know, if you're a songwriter, 25 years ago you wrote a hit song, it got 1 million singles, you could get royalties of around $45,000. Today you're a songwriter, you write a hit song, it gets 1 million streams, you don't get $45K, you get $36. Enough to buy a nice pizza. So Imogen Heap, the Grammy-winning singer-songwriter, is now putting music on a blockchain ecosystem. She calls it mycelium. And the music has a smart contract surrounding it. And the music protects her intellectual property rights. You want to listen to the song, it's free. Or maybe it's a few microcents flow into a digital account. You want to put the song in your movie, that's different. And the IP rights are all specified. You want to make a ringtone, that's different. She describes that the song becomes a business. It's out there on this platform, marketing itself, protecting the rights of the author, and because the song is a payment system, in a sense a bank account, all the money flows back to the artist, and they control the industry rather than these powerful intermediaries. Now this is not just songwriters, it's any creator of content, like art, inventions, scientific discoveries, journalists. There are all kinds of people who don't get fair compensation. And with blockchains, they're going to be able to make it rain on the blockchain. And that's a wonderful thing. So these are 5 opportunities out of a dozen to solve one problem, prosperity, which is one of countless problems that blockchains are applicable to. Now, technology doesn't create prosperity, of course, people do. But my case to you is that, once again, the technology genie has escaped from the bottle, and it was summoned by an unknown person or persons at this uncertain time in human history. And it's giving us another kick at the can, another opportunity to rewrite the economic power grid and the old order of things, and to solve some of the world's most difficult problems, if we will it. Thank you.
What'd you guys think? Did you like that? Yeah. It's pretty innovative. A lot of good ideas about prosperity. So I'd like to invite 2 of our audience members. First, I'd like to invite Ben Esplin to come on up and have a seat. He's a partner in the intellectual property group over at our office here, where Amy is also one of our members here, very active members. Let's see. Shepard Mullen. And then we talked earlier as we were getting ready, and I found out some real interesting things about Ben. But in his bio, he manages a lot of things like social media and AI and computer programs. So monetization of intellectual property is one of his expertise. So we're really, really grateful that you could come today and be on our group here. And then also Charles Robinson, would you please step up? He's a speaker, he's an executive coach, he's a cryptocurrency manager, and he's a certified blockchain expert.
Thank you.
Okay, great. And he's also an author, and I met him at a Forbes event last month here. So when I found out that we were having this event, I invited him to come and participate. So we have an expert in cryptocurrency and an attorney, and I think that the discussion will progress along. I've got a couple of questions I'm going to kick off with. Please think about what questions you have, and then we'll have a chance for you to ask those questions. So I mentioned this MOOC that I was taking, Robert Schwenker. He said that a blockchain is a peer-to-peer distributed ledger forged by consensus combined with a system for smart contracts and other assistive technologies. So with that as a possible definition, I'd like to know what's your definition of blockchain technology. And let's kick it off with Ben, please.
Okay, so I had someone describe it to me, I think, the best way possible, which is that a blockchain-based technology is a really crappy distributed computing system that's incredibly inefficient and slow, but creates a record of everything that it does. So in other words, it creates the blockchain as a storage medium that can never be erased, that you can rely on. That's why it's a trustless system. So it creates a record that exists forever of whatever you do to it.
I would say also looking at that word trustless, it doesn't mean we don't trust, but it means trust is built. No, there's no amplification. It's for the recording. Yeah, so it means that we don't necessarily, not that we don't have to trust, but the trust is built into the system because of the mathematics, because of the cryptography. And so we look at a blockchain, I would say it's decentralized, distributed, so you don't have a central bank that is controlling everything. Basically, it allows you to be your own bank. And anyone with a cell phone and internet connection and email address can receive and send digital currencies. So you look at the unbanked, there's 3 billion people in the world that are unbanked. Now we can bring them online into a banking system with the blockchain technology.
So 2 years ago, we held an event here, a happy hour event, and it had to do with the Bitcoin. Everybody's been talking about, in fact, you mentioned that it could beat $15,000 for one Bitcoin. Could happen while we're here tonight. So it's been in the news. But we're not really here to talk about Bitcoin. I want to talk about the blockchain and what applications it has for business. So what do you see besides Bitcoin that we can talk about with trust and accountability, transparency at their core? What kind of applications do you see?
So let me give you an example. So there's a company called Grid Plus, and I go to blockchain conferences. There was one in San Francisco recently called Ethereal. Also, there was an LA blockchain conference called BlockCon, and so you get to hear about some of these applications. They're exciting. So Grid Plus can basically allow you to manage your own electricity consumption and usage. You can draw down power from the grid, and you can connect it to your hybrid car. And so your hybrid car is charging up the batteries during the day, and you can actually upload that electricity to the grid. So that would be one example. I would say another one would be like distributed voting systems that are neutral and that are accurate and factual and verifiable. So that would be another example of a blockchain application.
I honestly, that's a great question. I think the fact of the matter is that we've only scratched the surface of what this technology is going to do. I've been saying a lot of the things that were said in that TED Talk for a while. I've never seen the TED Talk before. But honestly, the blockchain, and blockchain is a little bit of a misleader. You know, there are some cryptocurrencies out there that don't use a blockchain. They all use essentially a ledger, right? The ledger is the agreed upon record of what's happened. The ledger-based technologies it's the new internet, right? The internet unlocked information, made information so you could pass it back and forth. Ledger-based technologies are kind of the internet that can't be erased, right? If archive.org had every website that was ever created and you could go find them whenever you wanted to. So any system in which transferring information or safeguarding information is important, the ledger-based technologies can help. One that I think would be really incredible if it was applied to, although we have some other like legal systems that create an issue, would be medical information. If you think about the way medical information could be used and shared between practitioners for a patient, it'd be amazing. But the other thing that would happen is you would have a semi-private record of medical treatment for every patient who's ever seen in a hospital. And think about the record that creates and the type of machine learning and applications of big data that could be created with that. I was talking with someone yesterday whose father was a radiologist, and he was saying how, you kind of need a human to like read these images, and I was like, really? Because AI and machine learning to read images, like to interpret images, is like kind of one of the killer apps of machine learning right now. So it seems idiotic to me that a human would be better at it than machine learning. And his point was, well, it's still nuanced and there's a lot of noise in these things, and you need a human to like interpret that. And I said, okay, but on the other hand, imagine if all this information and the outcomes, so like when people misdiagnosis and stuff like that, all that was recorded somewhere, and we could use all of that to train AI to interpret these things. Would be far superior to anything a human could do. So that's one area.
Make a comment on that.
So go ahead.
Let me just going. So Bitcoin, the blockchain itself is transparent. What that means is a lot of people think it's all encrypted. It's not. Only the sender and receiver digital signatures are encrypted. It's open. And so you talk about medical information, you have to deal with HIPAA issues. And so there are other completely encrypted blockchains, like Monero is one of them, and the Zcash is another. So you want to look at security versus in the public blockchain versus private. You want to put up a blockchain, but you don't want everyone to be able to see it. Put up a private blockchain. Don't put it on the public blockchain of Bitcoin or Ethereum.
So there's permission and permissionless.
Yes, exactly.
So that's what you're saying by public or not.
Mm-hmm. Right, and Ethereum is coming up with wallets that will be able to identify you securely, and then once you're identified securely, then you can access all the other apps that you're authorized for.
Let's a hand over here first.
So I have a question about your statement about the blockchain and healthcare. So right now, because I'm working on that myself, and
I thought of it last night, so I'm not an expert. And I was a few beers deep, so let's not get carried away.
About because of blockchain, and you mentioned healthcare, that's something I'm working on.
Yeah.
Because of blockchain and HIPAA requirements, that requires that they have to have certain security protocols. In the Ethereum network, where you have smart contracts, that kind of sets the tone of a little bit of security. But the thing about it is if you have a contract, say I have a contract with her and her mom and a doctor, and I say, okay, the doctor has to make sure he does all these issues, make sure that she tackles all these issues. If she has high blood pressure, diabetes, and arteriosclerosis, and the doctor has to do a follow-up consultation to make sure that those parameters are all coming down. And it's surrounded around a smart contract saying that he doesn't get paid until all these measurements come down. That's enforceable because it's on the contract there. Do you think HIPAA and the medical organization will allow that to stand, that doctor doesn't get paid because he didn't help her with her medical condition, which is surrounded by the smart contract?
Yeah, so I don't practice, I don't do HIPAA, I'm not a privacy attorney. My guess is no, under HIPAA now. But I can't speak authoritatively. Someone's waving their hand like they know what's going on. Oh.
So we have somebody in the room who works in healthcare. Do you want to comment on that?
No,
Pat?
you can go ahead, it's fine.
Right, so I was going to say something unrelated. So
I can answer the healthcare if you want.
sorry, can you hear it?
Yep.
Is this another new topic?
I think we wanted to stick with the medical thing real quick.
So the question I would have is, why would you ever have health records in the blockchain?
Interoperability.
Right.
Right, but interoperability is created by permissions framework and what blockchain controls around access. Interoperability's biggest limitation right now in healthcare is simply the fact that you have no way to tie a patient record to multiple disparate data silos,
Right.
and a way to pull that together in a way the same way we pull together financial records with our social security numbers. Blockchain gives you one basic point. It gives you the ability to access securely through a permissions framework that says I've given somebody access, and it gives you the audit trail, which is HIPAA compliant.
Right.
That's the only thing you do in the blockchain. You would never, and the second reason, you would never take a medical record out of its current environment is because it would never happen. There's too many big EHRs that own that data. Why would you want to move it out of their environments? Simply figure out a way to create portals that access that data through the blockchain, permissions framework, and that gives you the data liquidity and operability that you're looking for. That's the concept.
Can I comment on that?
Okay, but can I ask, if you were able to keep anonymity could have data
Right.
that would actually show trends or characteristics. Could this help, like with figuring out how to cure cancer or figuring out all these different diseases if you have big data to be able to really sort this stuff and find out what's going on with symptoms and solutions?
And that's why the internet started initially, right? Of sharing of data. That was the first generation of the internet.
Think about the vision around what healthcare is. Healthcare, to me, is at the core of what blockchain's possibilities are, because it is at the core of the same thing that blockchain solved with currency, which is that whole the idea that you have that what he was describing a year ago, which is in some ways is ancient history but very relevant today.
Sure.
Right? Because a lot has changed when you look at outside of cryptocurrency. The healthcare space is the next most precious thing we own, which is our information. When he said, I wrote it down because I think it's genius, it's the you of you, owning the you. Well, in the financial space, it's the stuff we all know about on our financial side, or social security number. But when I think about us today in the healthcare space, we all have massive amounts of data that everyone would love to have access to, and everyone would love to be able to do machine learning around. The single biggest limitation is there's no way to tie me as an individual, or any of you as an individual, to all your data siloed records. Blockchain would enable us to create a single sovereign health record that would allow us to tie to all these things that would make SAM across all the EHRs and be able to not move that data anywhere, but allow us to get to that data and share that data. Imagine a place where all of us in this room would have the ability to give access where it was not necessarily by name, but by access to the information that is what is so at the heart of machine learning, at analytics, at all of the things that all of our researchers do. All of that can be done without ever giving any of that a privacy up, and it can be done through blockchain.
80% of the blockchain applications, from what I've seen, being a software developer, are not really good blockchain applications. It's kind of like in the 90s, anything that had a .com, oh, we're going to buy it, it's great. You know, this is like now .money. Anything that has a .money, it doesn't mean it's a good thing, because blockchain, as Ben said, is inherently very slow. We're only able to basically get about 6 transactions a second confirmed, which is like child's play compared. That's why we have Bitcoin Cash.
There's some pretty significant players working that.
Yes, like Ethereum's working on Plasma, Bitcoin Cash, EOS, and NEO as well. There's other ones that have smart contracts.
Okay, let's go to this question in the back now. That was a good discussion on healthcare, and we can bring that up again, but let's move on to this topic.
Yeah, so not really a question, more of a comment on what blockchain is doing in the financial world in terms of raising.
Another application, financial. Can you hear him over there?
Yeah, so there's
Can you stand up, please?
So there's this thing now called initial coin offering. Anyone ever hear that? This is a new way of raising money for your company. You start anywhere along the food chain or the cycle of your business. So what you can do is, using blockchain and the internet in its current form, is you can actually create essentially a cryptocurrency yourself, called a token, and based on that, you can actually do what's called an initial coin offering, where you actually put out there into your group, whatever your particular social circle is, your social media group is, to offer a small piece of equity in your business to the sort of rank and file in the world, as opposed to trying to go through accredited investors or other ways of traditional ways of capital. You can raise millions of dollars this way by using blockchain as underlying technology. So I think it's really interesting.
Do you have some comments on that?
Yeah, so the new thing is called the TGE, Token Generation Event, because ICOs have gotten kind of a bad rap. And we don't want to say that there's equity.
It's a bad name.
Right. So you don't want to necessarily say that it's equity in a company, because that implies to security. Then the SEC gets involved. So you want to say it's really a percentage of profits, more or less. And a lot of companies have been doing ICOs, raising money, and they're not even a company. They're just an idea. They're just a project. But yet they're raising, for example, Tezos raised $250 million, and that was 6 months ago, and the tokens aren't even going to be allowed to be traded until January. So we've got to be kind of careful with that. Don't throw your money necessarily in ICOs. I'm doing an ICO right now, so I'm actually doing it on the Ethereum blockchain.
So we're hearing two sides. We're hearing this is a really, really good thing, but then we're also hearing wait. So this is a good discussion to kind of balance it out. Right here?
Yeah, I was wondering if anyone has the opinion that
or the concern that speculative trading in certain things like Bitcoin could take it with a bad name and make it harder for bona fide applications to thrive.
Yeah, this is my area. We are in a bubble, by the way. It's a bubble. We recognize it's a bubble. $14,000 right now, been up $2,000 Bitcoin in one day. So this is giving a bad name. Also the crime aspect of them using Bitcoin. A lot of that is going from Bitcoin now to Monero because it's fully encrypted. So yeah, but it's like cash. It can be used for evil or for good, right? It can fund an orphanage or it can be used for cocaine.
I don't think it matters. I think it's inevitable. And so you said it's speculative trading gives a bad name. I mean, people speculate on the dollar. Like, that's not giving it a bad name. If you mean like kind of the gray areas of the law that people use it to exchange money, it provides less security than they think, which is why, as Charles said, a lot of people are moving out of Bitcoin to altcoins that provide them with a different level of security. It's not. I mean, the only thing it is that you don't put your name on the address. But those addresses if you scrape the blockchain, you can identify which ones are exchanges, which ones are drug dealers, which ones are laundering money. Like, all of that stuff, every transaction they've ever participated in exists forever. Right? And so all it takes is one piece of evidence that ties someone to one address. They then can be tied to these other addresses through its spending patterns, and you can be got, essentially. So I'm not concerned about that, and frankly, I think there's an inevitability here to this that it doesn't even matter. I don't think this is a bubble. Like, I've been watching this for a really long time, and it continues to move in the exact same direction.
Actually, if you look at the technical chart of Bitcoin, it's identical to Amazon stock in the 90s. So where does that tell you it's going?
Everybody says a bubble. How many people in here own Bitcoin? Okay, so what about user adoption? I mean, you only have 1% of people that are even...
I agree 100% with you, right? Like, if we want to talk about more exotic uses of ledger-based technology, we can do that. But a fundamental truth is that we require mediums of exchange for human economy to exist. Right? And we are constantly looking for a less friction-filled way to exchange value all the time, right? And that's how we got to fiat currency. That's why fiat currencies got decoupled from assets, right? And so now, if you think that you don't want to own Bitcoin because, then I own some numbers. You own numbers now, right? Unless you walk around and pay with dollars. Right? Yeah. That's all you own now is numbers.
Just one thing about that, though. You have, in the case of currency like the dollar, you have the central bank. You have someone who's controlling the supply.
Why is that good?
And in the case of Bitcoin, there's sort of, maybe the perception at least, of a loss of control over that.
Well, the consensus, that's why so the banks are terrified of Bitcoin. They're going to try to stop it. And we've got the NASDAQ going to do futures now. And so a lot of people said that's good, but there is a negative aspect of that because you can control $100 with a Bitcoin with $1 in the futures market. And so if they want to kill it, that's the way to do it because the banks cannot make money off of this. This is decentralizing, decoupling the banking system to you and to me. We become our own bank, and they don't have the control anymore.
But in all right, so I don't know if classical economics will even apply to this, but in classical economics, if you have an unlimited supply, potentially, right?
There's not unlimited. It's only 21 million. Yeah.
The central bank can cap the supply of money, but there's no one out there that's going to cap the supply of these tokens.
Only the original, only the developers can cap whatever coin they want. They have an initial minting that they'll say, and they'll never go beyond that. So that creates what we need to have, which is scarcity.
There has to be trust in that.
Yes.
Exactly. Trust is what we're talking about here. We had a question in the back there, and then we'll have one in the front, and we may have just one or two more, and then we're going to have to call it.
My understanding is that, may be inaccurate. My understanding of blockchain or Bitcoin is that every time a miner has a transaction, the entire chain is re-verified. Is that correct? Is that accurate? You're nodding.
It's not technically re-verified. It's not recomputed.
It also depends on which ledger you're talking about.
It's the entire chain, all the way from 10 million back to...
Well, the entire chain exists on every node in the network. That is the decentralized aspect of it. Sure.
Please. Tell me if I'm wrong, but that's
It's close enough.
The reason the miner's getting paid is for adding that block, but also for re-verifying the chain, and that's how your trust is established, because that chain is constantly re-verified.
The prior block,
Every transaction
yeah.
calls for re-verification of the entire chain. It's my understanding of it.
It's not the entire chain. It's just the current block is processed. What they say is we want this thing called the nonce, N-O-N-C-E, which is like a prime number with 40 zeros at the beginning of it. And by the way, Bitcoin mining is becoming more expensive every day. And so someone had said by 2022 it's going to consume all of the power that India uses, for example.
That's one of the points.
Because it's going to continue exactly
by
like
its
now.
nature, by its design, every transaction exponentially adds to the computer.
So we need a new energy source, by the way.
Currently, Bitcoin is using 50%, 50 of the computing power in China, and they are adding to that computing power warehouse after warehouse of servers every week.
How much of the gold do they own?
China owns most of the gold now too.
The point is that this is an exponentially increasing usage of computing power. By its nature.
So what's your question? You keep making statements. And what is the question?
What's the end point?
Well, Bitcoin.
What's the end
We don't know.
By the way, what
Okay.
is the end?
IDK.
One question over here, and then we'll give you a chance to help us with the
question kind of on that topic as well.
Okay, we're going to have to run out of time pretty soon, so let's go here with.
So I see this as simply an argument of bigger institutions and people that are trying to collect data and resell it, and they have a lot of institutional power versus the power of an individual person with their own data. And my question is really, how can those individuals join up together to really kind of become a larger mass and overcome some of these institutional pressures that don't want Bitcoin, or obviously, what we see tonight.
It's just a movement. It's power to the people,
But I think if it's not organized in some fashion, it's going to be, the institutionals are going to have some.
So as I said, I think it's inevitable. It's too large a population of the world that does not have access to modern banking facilities. We take them for granted. Right? We take them for granted. We are a very small sliver of the population.
It's just pushing the people onto it.
Like the gentleman said, in China, half the computing power is going to the blockchain. Why is that? It's because they have demand for something that's not controlled by their government. It's inevitable.
Good question, good answer. I'm going to ask you last question here.
I think it's important to separate the vision of what this promise is, which is very exciting. I love it. It's great. From the execution, okay? And what concerns me is the systemic risk that could be introduced by creating sort of an industry-wide or a nationwide single point of failure, if you will, regardless of what the asset we're talking about. It doesn't have to be currency. It can be anything. Because if anything we've learned in the last 5 years, it's that big companies and lots of money doesn't ensure crypto security, cybersecurity. So even though blockchain clearly has raised the bar, there's no guarantee that it's unhackable. So, in moving over to a blockchain solution for any asset, we've just taken what used to be in a single company and now made a industry-wide technology platform. So if it gets hacked, now your vulnerability is increased as well.
We've made it everyone's problem, right?
Yeah.
So it would have to be hacked on every computer, every node that runs it. So if someone asked me, okay, it's 14,000, what would stop this from going up? I said two things: a technological problem of some sort, like you're saying. If it was a bug or a virus inside the code that everyone's running, number one, or number two, undue regulation comes down from the government, you'd see a massive sell-off. By the way, even if the United States were to ban Bitcoin, it would still go strong in the world. Japan, other countries, Netherlands.
But hold on, just to his point. I mean, this blockchain has been focused on by the best hackers in the world for 7-8 years now,
Yes.
and it's almost impossible to hack with what we know today because of the simple algorithms that make it, and that's why mining can never go down, because there is no such thing as one miner. It's a set of computers that are running algorithms that are creating the blockchain. So this isn't people. This is just essentially if one set of nodes goes down, another set of nodes picks it up. There's short of something that no one's seen yet. There is no better solution than what we're.
The hackers wrote it. The cipher, not cyberpunks. Cypherpunks wrote it.
There's some secret code that somebody somewhere knows about, maybe. But I think fundamentally, just the way the math works, there's people who've been trying to do it for years. This isn't 2 weeks or 2 months.
Just really quickly, yes, please. I have been following Bitcoin literally since almost within 6 months of when it first started trading. I didn't own it. I just followed it. I'm a technologist. I was fascinated by it. When I talk to people and they don't get it and they have concerns, I say, look, you can get on or you can get off. This bus is rolling, right? So if you don't believe in it, take whatever you would spend on a really nice night out, whatever that is for you, right? Whatever that nice night out is for you, take that money, open a Coinbase account, and buy Bitcoin. If I'm wrong, you lost one night. If I'm right, it will change your life.
How do you do that?
See, the problem
So
from your perspective
we're gonna
you're
cover.
focused on your passion, okay? And many people in this room are thinking about, major change in their company. Is this something that I can base my company on?
Tell you what,
There's a
we're
big
gonna
difference.
cover this in a complete event next year, and what I'd like to do is I'd like to gather those experts in the room. I'd like to get your cards. If you would pass them and put them on this plate. What we'll do is we'll contact you and let you know about the event, and our committee will vet and try to decide, who would be the best. We may do multiple events if we get that much interest. So we've had a really good interest tonight.
Can I do my closing?
Okay, one quick close here.
Okay, so one thing we didn't talk about are smart contracts. Smart contracts are like Bitcoin Plus. Smart contracts are going to change the world. Why? Because you think about legal language in a contract being programmatized into a program where the programmers now, they just don't have power over the code, they have power over the money. So a life insurance policy that you take out lives on the blockchain, it's dormant for 40 years, it gets notified that you passed, immediately the money transfers. There's not letting it hold up on the wires or anything like that, or people saying, well, I can test this will, because everyone has agreed to the terms of the contract and digitally signed them at the beginning. The money transfers immediately. So it's going to eliminate a lot of litigation. So I want you to get that tonight too, because smart contracts will change the world.
Thanks, Charles. Thanks, Ben. Really appreciate everybody coming here. That's